In the currency quadrant, taking a look at the June Canadian dollar, which finished its third day higher. There were much bigger movers in the currency quadrant today, but the Canadian dollar's move this week is significant in the context of lower crude oil prices because Canada is a commodity-based currency, and the Canadian dollar is, and Canada's main commodity is crude oil. So the Canadian dollar finishes the week with a gap up and a sixth consecutive week of gains, up over 1% this week after being up over 1.5% last week. The high today, 82.47 in that June contract, only at 46 basis points. The low, 82.01, down 9 basis points. We finished the day up 30 basis points. So up almost 0.5% on the day at the highs, up about 1/3% at the close. Now, central banks are part of the reason Canada's had this consistent strength in their dollar versus the US. The Bank of Canada is being much more aggressive on their asset purchases, or I should say tapering their asset purchases, which they mentioned last week in the Bank of Canada Central Bank meeting, much more aggressive than the US Fed, who is pure status quo, continuing their asset purchases and talking about needing to see that data. We had one of the weakest days in the US dollar since early April today. Again, bigger movers, the euro currency up about 83 basis points against the dollar, the pound about 80, the yen about 46. Again, the Canadian dollar only about 30, but in the context of that crude oil move lower, this is kind of critical, showing that that central bank movement has a lot to do with what's going on with the currency, almost more so than the underlying economic fundamentals. Now, jobs is part of it. Canada missed on their jobs numbers this morning, overshadowed by the biggest ever record miss of the headline number versus the actual, or versus the estimates, I should say, here in the US. Canada missed down 207,000 jobs versus expectations of 175,000. As I just mentioned, US jobs numbers, 266,000 jobs added, but the expectation was just under 1 million. 8.1% unemployment in Canada was expected at 7.8. In the US, 6.1 versus 5.8, the same miss. Now, on top of all that, Canada had lower average hourly earnings and a lower work week. The US had higher earnings and a higher work week. So again, that inflation story with the softer Fed in the US than the Bank of Canada over in Canada amplifies that with these numbers from the jobs with the higher work week and the higher wages, which again could drive inflation in the US and keep the Fed loose, dollars weak, Canada strong.